Hi.
Hello. I like it. You're early. You called into the other call.
Yeah, I just figured I would be quiet and wait. So yeah, hopefully that wasn't weird.
No, no worries. No worries.
Just wanted to make sure the link worked.
I'll give it a couple minutes, let everyone dial in here. I'm going to close down some windows here. Last time we had our call last month, my computer froze midway, which is like tragic.
Are you doing this as a monthly or?
It is a monthly call, and normally we have been doing in-person meetups. The trying to find an event location has been a little bit difficult, but the go forward, we're actually gonna looks like Total Wine and More has like a classroom setup for 30 people that doesn't charge you. So now they may try to pitch us wine when we're entering, but the plan is and we're gonna do in West Seattle Total Wine and More for next month um,
Mhm.
for those that are in the Seattle area. But
Right.
yeah, if you're in town, yeah, you could totally come by.
I'm a little far away, so
Exactly.
the other coast. So, but but yeah, a lot of times places that serve food and things, or bars that have that serve food that have rooms will give you the rooms for free for expecting you to buy a bunch of stuff, buy food and stuff and everything and
Yeah,
drinks.
I had one, but then they're like, yeah, the minimum spend's 500. And I was like, I mean, if 30 people show up and it's 500, should be able to do it, but if 10 people show up, each person spending $50, that might not happen. All right. Just give it another minute here. And can you guys see my screen? Yeah.
Yep.
Yep.
Let me switch to presentation, slideshow. I'm not sure if that's better or worse.
It's small.
Is it better this way?
Yeah, yeah.
Okay, we'll keep it this way.
Although it's kind of formatted itself to be, only part of the screen.
Yeah. Let's see if I can zoom in here. Ooh, that actually. All right. Does this look better?
Yeah, better. Are
Okay.
you doing this on a regular, not widescreen monitor or?
Well, I have it on. It's hard to. I'd have to turn my camera on here, but I don't want to. I have like three monitors, 32-inch, that are vertical. So what I normally have is actually, and I split each monitor into two. So I have six different screens going plus a laptop over here. Let's see if this will work. I can, so you can see the,
Yeah, yeah. I think it's skinny because you've got them in portrait, horizontal. You need it in horizontal to make it widen out.
all right. Well, we got as good as we're gonna get without me trying. If I try to switch it sideways, the
Right.
presentation will probably go sideways as well. So let's see. We got about I think 30 people signed up, so we got half the people here. So let's go ahead and get rolling. Thanks everybody for showing up. I know we got a much larger, or I should say, a lot more audience outside of the Seattle area, so I'm excited to see that. A lot of the one rental at a time community is in here. I see Jason and Mark and CJ and a couple other people in here, so I'm excited to have all you guys here. There is a audience participation spot towards the end or beginning and end, so I'm looking forward to have you guys participate. For today's topic, so each month, for those that are new to this, I do a monthly meetup in Seattle, typically in person, unless I can't find a room. We've been doing these virtually. And then I do one specific topic each month. And so by the end of this meeting, I'll show you the agenda for next month's meetup as well. And that one will be in person. So for today's meeting, we'll do, since we have a relatively small group, we'll do introductions for those that want to introduce themselves, get feedback on their meeting goals so I can try to hit those as I'm presenting. The main topic for today is 10 years of real estate wisdom. So learnings, winnings, and what I would do differently. And then at the end, we'll go over Q&A or ask me anything. And then I'll talk about next meetups and announcements. So with that, I'll kick it into, for some of you that are on here, which I think Leo, I think was one of them. I don't think I've met Leo in person. Um, but there's a few people who are new that I haven't met yet. So I'll just go through my quick background here. From Washington, went to WSU for undergrad, UC Berkeley for grad school. I like to say a recovering financial professional. So like everything I do and think about, it's like in Excel. So if you don't have like something in a box, it drives me nuts, you know? And then I left the corporate world in what I'm coming up on 4 years. I'm 3.5 years out, and it's been amazing. It's so I'm looking forward for those that are already out. You're already living the dream. The others that are on the call, you guys will get there soon. And then in terms of real estate background, bought and sold over 100 properties, of which some of those are for clients. I would say maybe 50 plus are client related. And then me specifically is probably 60 or so properties I've bought and sold over the years. Current real estate portfolio. For those that do know me, this is actually about a third of what I used to have. So it used to be 45 properties and I think 125 rental units, but now it's 30 properties. I just sold one 2 weeks ago. So now it's 30 properties, 82 units. And I'm a full-time investor agent. So I'm managing my portfolio. I have a real estate agent team, which there's quite a few on the call here. There's six of us, me plus six, and we potentially have a new one next week. So that's a little bit about me going through what I like. For those that are comfortable, we'll go through just a quick what your name is, if you're a first time attendee, and then what's your goal of attending today. I'll write these down. I'll try to weave them in. Do my best Donald Trump weave into the presentation any of your goals that you guys have today. So if anyone wants to just go off mute, chime in, or raise your hand, either way works for me.
Hey, I'll go.
Thanks, Leo.
Hey, so Leo Williams here in the Dallas Fort Worth area. I have a W-2, which I'm in the one rental at a time group. Saw your post, and ultimate goal is to leave the W-2. I haven't bought any properties from an investment perspective. I've only had primary homes, and I just purchased another home and looking to turn my previous primary into my first, I guess, accidental rental. So here to learn, network, and just soak up the good stuff to get free.
Awesome, man. Appreciate you hopping in.
Yep. I guess
Anybody else?
I'll go next. My name is Jay Molis. First time being on this meeting. My goal for attending is to learn more. Currently, I have 36 units. I'm planning on retiring this summer. My W-2, I work in IT. And then that's just, always looking to learn something. There's always something you can learn from somebody else. So.
Awesome, man. You're on the green mile in a good way. 6 months or less, and then you're gonna hit freedom. So
Hold on,
uh
hold on, hold on, hold on. Oh, bye.
so I'll try to weave in like knowing what I know now,
Okay.
what I would do differently when I left. Okay. Anybody else want to chime in on name and
Yeah.
then goals out of today?
Hello, everyone. This is Ashish. I was working IT from last 10 years and then met Justin 2 years before. I was working as an investor from last 2 years with Justin, and now I'm a full-time investor agent with Justin's team. And here to learn more about from his journey, how he achieved that, and follow the same path.
Awesome. Thanks, Ashish.
Yep.
Ashish is under contract, or it's Ad is on here too, I see. So Ad is under contract on a deal closing Monday, next Monday. That would be a single family with two dadus being built in the backyard. So for those that aren't familiar, in this area, dadus are the hottest thing, which is a detached accessory dwelling unit. So just imagine a small house behind an existing house.
Yep.
Hey, Justin, I can go.
Awesome.
Yeah, April Keim. I'm a repeat attendee. Ashish, I was at the last
Yeah.
session that you presented at, and that was really,
Yep.
really helpful. So I met Justin at another real estate meetup probably about 6 months ago because I was in the market to buy an investment property and have since purchased one. It's a triplex, and we are going to be renting two and selling one with the Canberra group here, hopefully very soon. And my goal today is just to continue to learn. I too would like to transition out of my W-2 at some point. And so as I continue to learn and grow, hopefully that'll happen sooner than later.
Awesome. Thanks for being our repeat attendee. I love it.
Of course.
I'll go. Jason Kelsabetta. I'm in Chicago. This is my first time here. Happy to be here. I'm here basically just to learn as much as I can. I have 12 units right now, and I still have a lot to learn. I am retiring in 6 years, no matter what. So hopefully sooner.
Nice. And if I remember right, you're like a VP of an electrical company or something like that?
Yes, I'm part owner of an electrical company that's pretty much my W-2.
Nice. I met Jason at a bar in Vegas like a month ago, but he's also in the real estate, the one rental at a time community.
Yes.
All right. If anybody else want to do intro and what their goals are that they're trying to get out of this, so I can make sure I meet expectations.
Hi, Justin. Oh, go ahead.
Hey. Hey, Justin. This is Uche calling in. Justin and I go quite back. We used to work on the same team at Amazon over 10 years ago. I slowly have been watching him on the sidelines with all of his successes. But finally deciding, with everything that's going on with Amazon these days and tech in general, to kind of pursue real estate more seriously. And so just got my license, joining an agency, EXP Realty. And yeah, just wanted to learn from the best. So that's why I'm here.
Awesome. Thanks for hopping in. Yeah, we used to work together and I was the ops support for Uche. So as he was doing site development, site search stuff, I was the finance guy for him. So gosh, that was a long time ago. Was that 6 years or at least 6 years ago?
Yeah, at least. Yeah, more like 8, but yeah.
Oh man. My memory is not the greatest, which is foreshadowing one of my slides here. There's one other person that was wanted to do an introduction.
Yeah, hi, Justin. My name is Vipin. I'm from Canada, and my background is I'm from IT world. I worked almost 12 years in IT. Then thought of switching my career to immigration. I run my immigration company here, and I have my real estate license as well in Canada. So I have done a couple of transactions here. Now thinking of moving my things from here to there, and I'm working with closely working with Ashish and working on project. So hopefully, we'll start doing some transaction over there as well.
Awesome. I love it. Thanks for hopping in. CJ,
Thank you.
you got your hand raised.
Yeah, just figured I'd say hey. So CJ, I met Justin at the first ORED event in Vegas a couple years ago. I'm out of upstate New York. I've got 51 units. I work in IT full time as well from home. Not looking to retire anytime really too soon, probably within the next 10 years, but I'm just curious to hear about your transition to being an agent as well. That's probably something I would entertain when I retire. So just curious how that transition went, if it's proven to be successful at this point, and what you think about that.
Perfect. I got a slide already in there for you.
Cool.
Awesome.
Appreciate you putting this on.
Okay. Anybody else before I get into it?
Hey, Justin, this is
Hey,
Ara.
Etta.
All right, so good evening, everyone. My name is Ada, and like I think everybody else here, I'm in IT as well. And I just started working with Justin for last couple of years. We are on second project, and working with Justin is amazing experience, wonderful man. Got a lot to learn from him, and under his guidance we are working on a second project, so hoping for a lot of good things to happen in future. And yeah, like everybody else here, also looking for the freedom, financial freedom, so hopefully one day we'll achieve that. So yeah, thank you everyone.
Good seeing you again. I don't know if we've ever done a call. Did we ever do a call on this might be the first time I've seen you, even though we've transacted a couple times.
Right,
Yeah.
yeah, probably first time on a video call, but yeah, we speak
Yeah.
so many times. Yes.
Awesome. All right, let's do we'll do Jim and then we'll hop into it.
Jim Van Tassel from California. Been a contractor for over 30 years. Hoping to just build some relationships and network.
Awesome. And those that are on YouTube watching for content, your YouTube handle is the Grumpy Landlord or the Grumpy Contractor, right?
Correct.
Right. Perfect. And then Mark's quiet sitting there, but Mark's logo, the financial firefighter. I've done a couple YouTube videos with him this past couple months. He's actually my accountability partner. My goal is to do basically 100 videos for the year, average two per week. So thanks, Mark, for
He
hopping
hasn't
in.
adjusted to the time change yet.
Well, he's up so early. I
Yeah.
mean, I see the emails that are like 4 o'clock my time, which is like 1 a.m. for him. Maybe he hasn't gone to bed yet. All right. Let's hop in here. For me, my goal out of this is to share my experience so that you guys can leverage it in your real estate journey. Some of the things I've done in the past is from other people. Specifically on the agent business, most recently, meeting up with other people that are way farther ahead of me. I just ask them what to do and they just do that stuff. So hopefully you can watch what I did. Got good learnings and good winnings. Hopefully you can leverage that in your investing. And similar to Jim, I'm here to learn and grow and share together. I would love nothing better than a year, 2 years from now, or for Jay, 6 months from now, where we're meeting up and you're on the other side of the W-2 world. So looking forward to growing and learning with you all at the same time. So I'm going to start off, most people start off with wins. Um, I'm actually going to start off with learnings. And this is a quote that I say a lot. So people on the team, on my agent team, probably heard me say this a lot. So I never lose. I either win or learn. Sometimes you win and learn. So in this, so I'm going to go through my learnings first, and we'll start off here. And part of my learnings is I know that I get deal heat. So for those that don't know what deal heat is that when I'm starting to talk to somebody about buying a property, whether it's on market, off market, I just want to get the deal done. And sometimes I've bought properties that if I would have paused, asked my partner, she probably would have told me no. Or she did tell me no, and I got too much deal heat and I did it anyway. So that's happened before. So my biggest thing is like, or I shouldn't say biggest, but one of my learnings is I have deal heat. I need to figure out how to back away so I don't do deal heat and do the wrong deal or pay too much. So here's an example of a deal heat. So um, this is actually in a partnership with my mom. We ended up buying this property. What is this? October 2018. No, that's we bought it in March. So we basically bought this literally the week of COVID. So I actually remember when the lender called and said, "Hey, we're not doing any more loans." I'm like, "Dude, we're closing like in a couple days, right?" So they ended up giving us an exemption because they're worried about the world falling apart with COVID. So, but in this deal negotiation, I was like, "Hey, we've got money. I want to buy something. I want to get this new partnership set up." And I ended up buying this deal. And, in hindsight, I probably shouldn't buy it. It's not in the great area. Um, I don't think it does this anymore, but when I originally went and looked at this property, there was just a lot of what I'll call riffraff around there. Like if you were to zoom out the house to the right, it's like a stoop and people smoking weed and drinking and everything. So this ended up being, if I didn't have deal heat, I probably would have been like, let's not do this. Let's get a better location. So that definitely is a learning I had. When it's all said and done, we ended up selling this property. So bought it for 85, sold for 117. By the time you factor in the costs that we fixed the property up, the cost to sell the property, you know, agent fees and excise tax on all that, we probably ended up breaking even on this property when it was all said and done. So, one of the other things on here, like, because I actually went and did tour this property, I flew out, looked at it. This is like the living room. It has this like weird setup is the only way I can describe it. It's like if they tried to make a fish tank inside. So there's like this big kind of glassed area here, and then this like rockery that they put in it. Makes no sense. So it ended up when I went to go rehab this unit and sell it, the rehab cost was pretty high to get rid of all this stuff in there. So I'm just gonna, if you guys have questions as I'm going, feel free to ask. I'm just gonna kind of toggle through these as we go, keep us on time. So the next one here for the ORAP people, this would be the alligator that Zuber talks about. And I used to think, you know, it, for those that were at Amazon, where I was doing real estate at Amazon, I had Michael Zuber present at Real Estate Amazon. And we talked about it, and I was like, alligators aren't that bad. But once you leave the W-2 world, because what was happening is I had all this income coming in, and if it was negative, I would just have the Amazon income kind of covering all the mess, the losses, right? So if my learning is I should be looking at properties that are self-sufficient day one, meaning they're at least covering the debt coverage. So after all expenses, if the mortgage is say 1,000, I should have enough income or rent to cover that $1,000. I've done quite a few deals, and I still have some that are still negative each month. Some of them are a couple hundred, and some of them are a lot bigger than that. So if I was to do it all over again, I wouldn't do as many of these alligator ones. So here's an example of an alligator deal I did. So some of the easiest ways to buy properties are go to the people you already bought a property from and see if they have more to sell. So this seller, I've bought three properties from her. Her last property is an eightplex in Wisconsin that I'll probably buy next year. She's already told me she wants to sell it to me. So I was like, hey, I bought a fourplex from her in Milwaukee. And then I was like, hey, do you have any other properties you want to sell? And she's like, yeah, I got this other property. And so, well, where's it at? And she's like, you're probably not going to want it. It's in Detroit. Well, at the time, I had already owned in Detroit. So call my property manager, like, hey, this is an Inkster. Would you manage it? What's the area like? He's like, it's a little rough in that area, but I'll go ahead and manage it for you. So on this one, I ended up doing seller financing on it. So it was a negative cash flowing property. So if you look here on the side, the reason this seller was selling it is that she had lent money on this and she had to foreclose on the existing owner, right? So that could have been a warning sign for me. So what I ended up doing, I ended up buying this property for $25,000 in what is this, 2019? Yeah. So, which seems crazy, right? This is a freaking brand like a brick house for 25,000, right? Three bed, one bath. Now, they had to do a little bit of updates on the inside. So the deal structure on this was $25,000, $1,000 down, $1,000 a month, and the rent at the time, which you can see, we listed it. It looks like 875. So before, I'm already negative before I just on the mortgage, right? So when you start counting in insurance taxes and all that stuff, it's even more negative. Now, I own this one in my retirement account, which I had liquidity in, and I was like, back to the deal heat. Deal heat wanted to do a deal and then structured this one. So this one ended up being an alligator, obviously, for the 2 years that I had it. But this one became a problem child as well, where the tenant stopped paying. They then moved their friend in, and were renting the place out. She subleased it without me knowing. So when we went to go evict her, we had to evict the tenant and my tenant. Then when that was done, they had a eviction moratorium. So then the moratorium lifted. Then I had to evict her again. So like this took like 9 months to ultimately get her out of the property. So it's one of those where it was kind of a problem from the start, an alligator, and ultimately was an alligator. Now, I ended up selling this. I probably put in 30K into it. So what is that? 25 plus 30, 55. So I made a little bit of money on this when it was all said and done, but there's a lot of emotional damage and a lot of time that was factored into this. So if I looked at return on time, not a good investment either. For me, like when I get into something, I'm like all in all the time. So whatever it is, I'm gonna go all in on it. And for me, like I left Amazon, then I went full-time investor and agent. And then I was like, oh, I'm gonna do these development projects. Here's what the plan is, gonna be easy. Instead of doing one, I did two at the same time. And I did hard money and private money on both of them. So it was by going all in, it ended up these two deals right here were uh, big time negative cash flowing for me. So here's the two broad projects I ended up buying. The one on the left is in Tacoma, south of Seattle, and I bought that April 2023. You can see there's two houses on here. And so I was like, oh, well, I'll just cut this into three. And then this space here, I'm going to develop it. I'm still in the process of splitting this almost 3 years later. This just goes to show you the the city's requirements is such a drag. This is why housing's so expensive. I'm 3 years in on something that seems so easy. You're literally just moving the property lines. So there's been a lot of other issues that have stemmed out of this, and you'll sense a common theme where like there's a problem at the beginning and it kind of continues with the property until you're done with it. So this property here, I'm negative 6,000 a month. So there's that one. And when it's all said and done, I'm gonna lose at least 200,000. Now, on this one, at least I got the new parcel of land. I'll make at least 200,000 when I finish the TBD on what I'm going to build there. It's either single family, manufactured home. I can make 200K net, or I could do a couple like a build to rent, um, duplex or maybe a triplex there. This one on the right was a development deal. The existing house is here in the back, and then I did a in the front a detached accessory dwelling unit. This one closed. I sold this one, I think it was November, and then the new daddy I sold in December. This one took me 2.5 years to complete. A lot of issues on permitting. I had a neighbor dispute with these three neighbors, which almost had to go to court related to this. So another one, I had some problems in the front, and then it just dragged on. There was a sewer backup, which backed up into my unit, which I'd already flipped. So I had to re-flip that. So this is another one I probably lost when it's all said and done, probably 200,000. So as I'm working, those people that are on here that are clients, they're like, well, how did you know what you know? This is how I know. These learnings are how I know. And I'm trying to not allow you guys to get into the same predicament that I was in. So by going all in, if I would have just done one of these, would have been more manageable. So when I had both of these going, it was negative 12,000 a month. So imagine, you don't have a W-2 anymore. You're living off your rental income and then the agent income. Gets you back. I was back on the hamster wheel because of this. So back, the CJ is asking about the agent business. The agent business was feeding this. So I was basically working as an agent for free to do these projects. So silver lining, it helped me build up an agent team and become a successful agent. This next one here, and like I said, if you guys have questions, feel free to raise your hand, chime in. Um, Stay in your lane. So like I'm like the what is that? An inch deep and a mile wide. I'm like a master of none because I just do so many different things, which now I'm trying to go back, simplify things. So for me, I was just into too many different things. So I ended up finding this off of Craigslist. And I was like, oh, these tiny homes. So I started researching tiny homes, found out that if you guys know Rob Abasolo, he's a big time short-term rental guy. He started with effectively a tiny home in his backyard. So I'm hearing this on Bigger Pockets, talking to local people. They're making tons of money on it, and quite frankly, I made a ton of money on it originally. So I found this old post in August of 2022, which is peak around here in the Seattle area. I almost made 10,000 off of 4 tiny homes, so almost 2,500 per tiny home. And each of those tiny homes has about $500 of debt. So I was almost netting uh, 2,000 per tiny home per month. So that's like amazing, right? Now, fast forward 4 years almost. What did everybody do in the same time period? Man, you can make a ton of money in short-term rentals. More inventory came on the market. Then they're like, let's get more unique. So then like there used to be only like 10 tiny homes like around Seattle. And a lot of us knew each other because there's just not very many. Over the last couple of years, I mean, there's hundreds of tiny homes and these other unique type of you can rent RVs and all that now too. So just to give you a sense of what it's like the profitability, I'm happy with breaking even today. And I actually sold one of these 2 weeks ago, the tiny homes. So, which I took that money from the tiny home and paid off the remaining debt on the other ones. So at least I don't have any debt there. But the one thing about a tiny home where they're at, this goes back to, I didn't think about this at the beginning. I have to pay lot rent. So whether I get one booking or 1,000 bookings, I have $650 lot rent for all these tiny homes. So uh, that fixed cost is a huge fixed cost. It's hard to overcome when the average daily rate's down and also the occupancy's down. All right. the next one here is learning, so having more reserves. So for me, like at the peak, it was 45 properties. And the only way to buy a lot of properties is either you have to have a ton of money or a ton of leverage. I was a little bit of both. Like I was taking all my Amazon money and I was pumping it in. Then the market increased. Then I did a cash out refi, bought more. Then I did partnerships, bought more. Every time I had like 20 to 30,000 in the bank, or I got a new RSU, so a stock vest from Amazon. I would go out and buy another property. This is back to my deal heat, my addiction. Like, it's like I need to go buy more. So the learning from this is that when you have more properties, you can have more problems. So, for example, this is just one example, relatively close by, different states. In what was this, 2023? I think year 2023 was the year of trees. 24 was the year of water claims. It was like, the more units you have, the more people there, the more problems, right? So like this, for you guys to know, I do this renting out my parking lot. So I still lived on the property, thank God. I go out after this huge windstorm. It's hard to tell here, but this tree's definitely snapped and it's literally hanging over these cars. And so these people that leave their cars there, they don't leave the keys with them. So I'm like trying to frantically call all these people to have them move their cars, but a lot of them are out of town. So I quickly had to come up with a plan. So I hired a tow truck company and he moved all these cars around and then I hired a landscaper to cut this tree down. So, gosh, I want to say this was like 3,000 bucks, like poof, gone, just from a windstorm. And then there's this other one on the right was in Iowa. There's two aplexes side by side. There's this big ass tree out in the front, right? Which is no longer there, obviously. There's another huge storm that happened there. And wouldn't you know, the tree falls on top. It never falls away from the house, right? Literally, if it falls the other way, no big deal. It's actually, I would have appreciated it because I could get rid of the tree. So it ends up falling towards the house, which then kind of good, kind of bad. It falls on the power line that goes to the house. Good in that it helps stop it from, really hurting people, but bad in the sense that it snapped the mast on the top of the building. So, and this was a Murphy's Law, Memorial Day weekend, bad weather. So to get anybody out was like double time, and it was a Saturday and Sunday. So Jason's probably licking his chops, knowing that you can charge literally whatever you want. This was like 10,000, or actually more than 10,000. I negotiated it down to 10,000 because they were like they brought out two guys and they said they had to wait there for the power company to turn it back on. And I'm like, well, give me your log of hours and why am I paying so much? So we ended up getting it down to 10,000. But because I didn't have like reserves because I was going buying, I had to negotiate with this contractor. Thankfully, they worked a deal. I literally I paid them, I think over 9 months, and I paid them something like $1,000 a month for 9 months to settle up. If I would have had the reserves, I could have just stroked a check with it, right? But in this scenario, I had to find a way. And for those who are probably like, well, why didn't you use a credit card? Well, I already maxed my credit cards, right? So this is what happens when you expand too fast, right? So having reserves, I would stack up more reserves. So I'm in the process now of stacking reserves. So as I'm selling properties, I'm taking some of that, holding it within my life insurance policies. As I make agent money, I'm pumping it in back into life insurance. Uh, Bookkeeping. So this has been the bane of my existence, and I started in 2016, and I kind of like did my own. Then I had H&R Block, Then it became too much for them. Then I had, um, I'm drawing a blank on her name, but there's a lady that's on Bigger Pockets that does bookkeeping. I was working with her for a bit. Then I went to a bigger company, and they were just total shit show, that bigger company. Combine that with me that I don't like doing bookkeeping, and it was a recipe for disaster. So I got super behind on my books, such that like um, every year I obviously, for real estate investors, most people extend. So instead of April 15th, it's October 15th. But I was like filing 6 months plus after October. So by the time I figured out the balance, then I had to pay the taxes and the penalties, right? So, and here's what can happen to you. So this is me trying to organize. So I would just stack it all up, and I'm still doing it. Like this is like right next to my desk. I got this more stuff. But so this is me like, okay, I got to do the taxes. I got to organize everything. Like this is like different entities and properties, and I'm like having to organize it all on the floor. Um, because of this, in 2022, what ended up happening is somebody did tax fraud. So somebody filed on behalf of me, ended up, I don't even know if they got money or not, but they ended up filing on behalf of me. So then by the time I finished it, I submitted it and they wouldn't receive in my taxes. And I was like, what's going on? And they're like, well, you need to come down to the IRS office. I'm like, oh no. So you never want to be here. Just so you know, there's actually a live security guard when you show up here, which I didn't know. So I had to go to the IRS. I had to prove that I was the owner of my companies and that I'm a real person and that I didn't file. It was some other person, right? So this was in 2020. Yeah, this was in 2023 at the end. And then when this happens, you get out of the normal process. So instead of e-file, I had to paper file for 2022. So I paper filed, I believe it was April of 24. This check that you see right here, this is my tax return from 2022. I was supposed to get $21,425. That was what the tax return. This is from when I was at Amazon. This because at Amazon 2022 is part Amazon, part agent in investing, right? So we're like, so I ended up getting 5,000 more. The reason is they held on to my money for 4 years. So I was getting like between 5 to 7%. So I got like 5,000 in interest. But this check, I literally just cashed this check in February of 2026. So I literally just got that, right? What I do is I like then save that, put it into my life insurance policy for increase my reserves. So now I finally have I ended up firing that old company. I got a new company. I can actually two. I have one that's just a tax guy and one that's the bookkeeper. And the bookkeepers are way better. So now they follow up with me, making sure I get back to them every month. Here's the things that we need to finish the books. And then they give me a list of all the action items. So they basically help me to help myself, if that makes sense. And then the tax guy, this guy's amazing. He's like the most, I don't know if what do you want, aggressive tax guy. So he basically was saying you can write off basically anything except personal hygiene and groceries that you get at home. And so the 2020, see, was it 2020? Yeah, he filed my 2024 taxes. Yes, late again. So the 2024 taxes were just filed in 26. And when he went through it, so basically the first number came out and he's like, "Yeah, you owe 20 something thousand." I'm like, "Hey, I'm like I don't see how I owe any of this money because I'm like I'm making money over here, high positive and a negative. For those that are real estate professional, you can wash all this." So What he ended up doing was taking all my real estate agent income, funneling it through my investment company, the one that was doing those developments, and it basically offset all the income. So instead of paying 22,000, I paid zero tax in 2024. And then I was like, hey, what about 2023? The guy that filed my taxes in 23 didn't do what you're doing. So he's like, sure. So we're redoing 23. And then he's going to do the 25 as well, structuring it the way he did to save me. So, and the other thing we're doing is the Augusta rule he was training me on. I had a different interpretation. I basically thought that if you rent your house out up to 2 weeks, those 2 weeks of income don't count. But what he's saying is that you can pick any place where you live and then rent that out at market rents. I'm like, tell me more. And so effectively, he's like, hey, if you had to do a business meeting and you were to reserve a hotel and you wanted your own break, your own conference room, rooms for everybody, and your standalone kitchen and all that, what do you think that would cost? And I'm like, I have no idea. He goes, sounds like $3,000 to $4,000 a day. And I'm like, yep, sounds like 4,000 a day. So 4,000 times 14. I'm writing 56,000 a year off related to this Augusta rule. And I'm like, you sure I can do this? He's like, all the people in Congress that generated this is why it's there. It helps them. They don't even audit it. I'm like, okay. So now I'm redoing 2023, 24, and then I'll do 25, this Augusta rule. And then the last thing that we went over is like, hey, I travel a lot. Every time I'm traveling, I'm doing work stuff. And can I write it off? And he's like, yep. I'm like, well, my fiance goes with me on these trips. He goes, you can write that off too. And I'm like, how is that possible? He's like, well, don't you need like support on helping you be in a right mindset to take care of your business? I'm like, yeah. He's like, okay, then you can write it off. I'm like, oh my God. So we're going back gonna for 23, 24, 25, log all of our travel costs and write that off too. So I'm like, this guy charges 425 an hour, but I mean he's saving me like crazy money on taxes. So day one, if I would have had my books right, it would have been way, way less. That's the number one most stressful thing that's in my business right now. All right. Shifting from lessons to wins. So this is a picture actually from last week. We took a cruise to Mexico and my fiance won the jackpot. If you can't see that there, we won 11,315 bucks. So this is the first time I ever had a band. So it's like $10,000. So they paid us all out cash. So I took this picture. If you guys do texting, there's that one meme guy on there that's got all the cash on his head. I was replicating that, but um, so let's go over the wins. Mine, like one of my number one things is like massive action is how I got massive results. So I was just heads down like for really 6 years, 2016 to 2022, just plugging and chugging. Um, so 45 properties, I think it's 125 rental. At the peak, I mean, gosh, it was like 120 something thousand of rental income coming in every month. It was four across 4 states, had 4 different partnerships, which ultimately allowed me to leave the corporate world. On top of this, I was doing joint venture flips and wholesaling as well. So all that combined is what got me out of the W-2 world. This picture here is actually my last day at Amazon. So I took that, sent out the goodbye email, took that picture, and then left. Next one here is keep active income coming in. So in 2016 to 2022, my active income was predominantly Amazon. From 2020 to about 2022, I had a couple flips in there and a wholesale deal, which were adding money as well. And then after I left Amazon, I ended up doing like creating a real estate agent business. And so that's my active income today. So that still allows me to, you know, take more trips, but more importantly, I can still acquire properties with the money that I'm generating out of the agent business. So that's one of the big wins that I had over time. And I very fortunately, the Amazon days, and if Uche's still on, he could probably attest to this. Like we were making more money than we were supposed to, just because the stock was going up so much. So like when I signed my first contract there, I think it was like 2013. I think the total comp was supposed to be at like 185 or something like that. But like I averaged over 200,000 a year. Like some years I'd make like 250,000, like way above because the stock would like double in the year, right? Not because I'm smart and killing it. It's just because the stock was going way up. And that went all the way really until 2022. That's basically when Amazon kind of crusted. All right. I've been going if you guys have any questions, let me check the chat, see if there's any in here. Yeah. Morgan's like saying, are you trying to convince us not to invest? Yes. I'm trying to show the real world of what actually happens out there. So it's not always rainbow and butterflies. If I went slower, it could have been. So, and then there's a question here. What's your main source of lead gen? So the highest number of properties I bought were on market. Then after that, it would be Craigslist/Facebook. And then number three is direct. So me cold calling sellers. Troy, you have a question?
It's not necessarily so much as a question as it's more of like a reframe. It's I think more or less what you're saying is that, you know, we all want to invest into real estate to generate passive income, as they say, to get to the financial freedom that we want in our golden years, more or less. But the
Right.
bigger thing is like know what your risk tolerance is.
Hmm.
Going into whatever strategy you choose to invest into, make sure you have enough reserves to be able to weather the storm. You had the W-2 income that probably gave you a little bit of confidence knowing that like you were biting off way more than you could probably chewed, but you knew that that income would shelter a lot of some of the craziness that ensued. Had you not had that income, would you went so strongly into the investments that you were taking on?
No, that I couldn't have, right? Now, my main thing, and this is why, because like, if you ask my fiance, she would tell you, "I told you so. You should have slowed down. I told you 6 years ago." And I was just like, "Bye, bye, 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 heads down." My main mantra was full risk on, because my only downside is that I would be exactly where I'm at. So if I go buy zero properties, I still work at Amazon. I go buy 100 properties and I go bankrupt, I'm still working at Amazon. So I was like, Eminem, one shot, one opportunity. I was like, I'm gonna go out, buy as much as fast as possible to try to get out. And so I was full risk on. Now, post W2 world, I'm risk on mine totally risk off. So taking the risk down, that's also with leverage, increasing the cash positions. But to me, that was my only way that I could think about getting out was buying these cash flowing properties. Hence why I bought mostly in the Midwest versus locally.
Yeah. So it's what would you recommend to someone just as a hypothetical? I mean, there may be some of those people in this very Zoom call right now that are just beginning their investment journey. They they have a family, a growing family. Like,
Mhm.
could you paint a picture of what is like a realistic like risk tolerance to take on, and what would you recommend a strategy for them to do to start reaching for their goals?
Yeah. It's funny you say that because that one other thing I thought about, if when I look back about what I bought a lot of small multifamily in the Midwest. So my thought was is no one deal could take me down. So if I bought a lot of small properties, I could basically trim them out, sell them, get divest of them, versus if it was one big property. So that was kind of why I went smaller. Now, if I was starting all over again, or I'm a person that has a family, I would recommend not doing a full risk on. First, talk with your partner, see what you're comfortable with. And for some of the people that are on this call, we talk about we're in have a separate group called the Launchpad. Uh, Level one, start with the income statement. How much money you're coming in, what's going out, how do you increase your savings? Two is focus on your net worth, what's your assets, what's your liabilities, what's your net worth. Then from there, start figuring out what's your most achievable next step. So most likely it's your first property. If your partner is open to it, do the house hack, duplex, live on one side. If they're not open to it, then buy your first rental property. And I would focus on buying it, stabilizing it, having the reserves, then do it. So that would be a more programmatic way to do it, less risk, less stressful, and not put the entire family in risk. Now, the whole time I had a girlfriend the whole time, now fiance. So like I was operating on my own. Now we share everything, so it's like a different parameter, right? So like she has ultimate authority to veto every deal moving forward. So which is good because I get deal heat. She's my she's my auditor to make sure I don't do something dumb. So that's what I'd recommend. Jim.
Why did you pick the states that you're in?
So the first state, well, first I went long distance, which was 3 hours away in Yakima. I see Flavio's on here.
Yeah.
Flavio's in the Eastern Washington area. So I was in finance at Amazon. I was like, man, nothing makes sense around here unless I live in it, but I'm already living in a house. So then I was like, well, my brother lives in Yakima. So then I found a property on LoopNet, ended up buying an 11 unit. I don't own that one anymore. I started there, and then I was like, okay, Yakima, I can't really find anything. I got more RSUs coming. I want to go buy something. And then I heard on Bigger Pockets this guy, I don't even know the guy's name, young guy, was buying in Milwaukee, and I was like, well, I could go visit my friends in Madison, and we do a golf trip every year. I'm like, well, geez, why don't I fly into Milwaukee, meet some agents there? And I did this so I could do a tax write-off too. So I went in early, met with people, then did the golf trip. Then on the following Monday, I did more business stuff. So the primary reason for the trip was for investing. So I was able to write that off. But that's how I got into Milwaukee is I heard about it on Bigger Pockets. I was already going out to that area, and so I researched it. Then I was in Michigan, or yeah, Michigan, and at the time, you know, still to this day, Michigan's or Detroit's trying to come back from the industrial era, so the 1960s. So, because it went from like 2 million people down to 600,000, some crazy number. So I was like, oh, I'm hearing it's coming back. At the same time, Amazon was looking for another corporate headquarters, and Detroit was like one of the top on the list. So I was like, let's go check it out. So that's why I went there. And then Iowa, that was just happenstance. A friend of mine, she who ex-Amazonian, she wanted to get rid of this property. She said somebody was wanting to buy it sub two, and I was like, don't sell it to that guy, sell it to me. So that's how I got into Iowa.
And then what's the average age of your properties?
Jeez, if I had to guess, probably 90 years old. Yeah. So the
Yeah.
Midwest, there's a lot of old inventory. You know, there's one, I have one that's like about 150 years old.
And what percentage of those are fully rehabbed, all new systems?
There are none of them in the Midwest. None, probably none of them. They all have something that's not done, whether it's the roof, the mechanical, like the plumbing. There's one that one that's 150 years old still has galvanized. So we're piece by piece redoing the pecs. So because what ends up happening is it can burst or it can what's happening now is the corrosion so much that the water's not getting through. So, but yeah, there's a lot of potential deferred maintenance, which when I get in further, this is one of the reasons why I'm selling some of these older properties.
That's my complete strategy is to buy that old house, do everything from the beginning, burn it out, get my money back, and then I have a 10-year property or more.
100%. Yeah.
Yeah.
That's what I like about the properties I have in Washington. Obviously much newer, and they've, for the most part, they're all updated. So where like I'm not having to do any major thing in Washington because they're all fairly new. Or they were new water heater, new furnace, or new roof, relatively before I bought it.
And then last thing is you mentioned something about life insurance policy for your reserves. Can you walk us through that?
Yeah, like this is a whole another topic for another day, but I do something called infinite banking concept. So it's high cash value life insurance, meaning low death benefit. And so you put the money into these policies, and then the whole concept of it, and I have a book over here. It's by Nelson Nash, if you look it up on Amazon. Um, so by doing this, you get cash value, usually within about 3 years. The money that you put in, um, you know, you have to fund it. So the first couple of years you're funding it, so every dollar you put in, you get less than a dollar. But usually around year 3 to 5, if you structure it right, every dollar you put in, you get more than a dollar out. And the goal for that is to then, and what I'm doing now is paying back these policy loans and then using that as basically my liquidity to be my own bank in the future.
You.
So if you're into that, check out IBC Global. I actually did a podcast with him a couple years back. Actually, it was in 2022. So if you're interested in that, you could check out. He's like great in terms of explaining it. Scott, you got a question?
Yeah, I just wanted to touch real quick on risk tolerance. Because if you ask my wife, I famously fly way too close to the sun.
Yeah.
So what worked best for me, hang on, let me lower my hand here. There we go. So for anyone that doesn't know me, my background, I'm also former Amazon. I was in corporate finance for about 15 years. I only worked at Amazon for 2, but that is where I first initially met Justin, and now I work on his team as an agent. I've been an agent for 10 years, a loan officer for 2 or 3. But yeah, having a family, I have a wife, I have 2 daughters, they're 6 and 3. Something like house hacking, buying a duplex, living in one side, renting out the other is just not feasible for me. So what I did end up doing to start growing capital when I knew I wanted to go for having rental properties, getting out of W-2, I started doing private loans. And essentially it was short-term kind of stuff. Sometimes as little as 14, 30 days, usually about somewhere between 6 to 9 months. Either an investor that's doing a project or an appraisal comes in low and they need the money to close, stuff like that. But long story short, I set up a separate LLC. I put, I took a certain amount of capital. I think I started doing the private loans in like 2017 or 2018. I put in 15 grand. My best friend put in 15 grand. We still own it to this day, 50-50. We started with $30,000. And for me, the risk tolerance on that, I'm getting into risky loans in the first place. It is sometimes I'm in first position on a property, but a lot of times it is collateral that you wouldn't normally expect. And I think Justin can attest to this because I've shown you a couple things I've done, and you have wondered where my risk tolerance is. But the fact that I started that LLC with that 15 grand, I don't consider it play money. I take it very seriously, and I've always had the intent build that capital up, and that's what's going to get into the first rental property, get into BRRRRs, rinse and repeat. Um, but I know that money, because I created that LLC, I know it's separate. I know it is, whether I have a W-2 or not, it is completely detached from what I need and what my family needs to be living on. And if the worst case scenario happens and there's a default, and we've had pretty good luck so far the last 7 or 8 years, nothing like that has happened. But if the whole thing went belly up, none of that capital, as much as it would be terrible, is touching the capital I know I need for my actual family. So that is what I did to switch out, or to knowing my tolerance for risk.
That
I
kind of
made
goes to Troy's point. You could start a side hustle on private money lending,
yeah,
build up the liquidity there, then use that money to buy.
So I made that dividing line very, very intentional so that one never touches the other after I just made that initial $15,000 investment 7 or 8 years ago. Yeah, like you said, it is money I know maybe it'll benefit the family one day, and I expect it will, but I've always just been in growth mode on that, and it doesn't touch any income that I make as an agent, a loan officer, a W-2 employee, anything like that. It's just totally different. And that's how I got around it, because I knew if I didn't separate that, I would spend every extra dollar I had in my bank account and put it into a loan that was kind of risky.
Yeah, Scott actually brought me in on one of the deals. He had all his money lent out. I think I lent like 40,000 or something for like 2 weeks or something like that. And I think I made like $2,000. So like some crazy return. And so what was funny is that Scott reached out to me. And the guy that ended up needing the money, I'm actually friends with. So small world. But private money lending, I've done a couple of them since Scott got me into that. Um, can be a great way to earn some side hustle money, especially if you have, like for me, I do it out of my retirement solo 401k account. All right. I love it. We got some interaction there. We are got a couple more wins, and then we'll do the things I did differently. Probably one besides taking massive action, my low cost structure, that's been really the secret to success. So like when I was at Amazon, I think I was paying about 2K. This is the Metropolitan Tower right downtown. Then I moved to West Seattle, got 2 bedrooms, and that was like 1,600. And then this is my first property. This is my house hack. So I ended up originally I was only paying about $700 per month net to live there. So uh, so during my Amazon years, making over 200,000 a month, I was living for $700, and most people are spending 3,000, probably more, on rent. So like I always, so I and that was just a 1 bedroom that I was living in, and even now, I actually moved out of that and live in Snohomish. We have a 2 bedroom. We pay 1,400 for rent. I rented out that my old unit for 1,750. So like I'm still like geo arbitraging. I effectively increased my cash flow $350 a month just by moving, and I get an extra bedroom. So low cost structure for those that are thinking, how do I even get property one? Yeah. This is like the easiest thing that you can control. And it can be even if you have an apartment, say you had a 2 bedroom apartment, you can have your friend move in. You may not like it, but hey, if it cuts your rent in half, that's the seed money you're gonna get to then buy your first property. So I'm a huge fan of, whether you do a rent by the room and an apartment, or you buy a house rent by the room, or a house hack. To me, it's like the number one move you should do. Wins. So building a community, there's quite a bit of people that are on this call that came out of the community that I built while at Amazon. So I went to a local real estate meetup, but I think it was 2019, see, 2019? It's either 2018, 2019. And at that event, all the Bigger Pockets people were there, and you could have dinner with them if you won a raffle ticket. Basically, you had to be the highest bidder on whether it's an auction item or a silent auction item. So I bid on two silent auction items such that I could go to have dinner with these Bigger Pockets guys. So like Brandon Turner and Jay Scott and Scott Trench. I'm sure there's other ones there, but so I ended up getting into that. To get that, I had to go. I ended up getting both the silent auction things, right? So because I was like, I'm gonna get into this dinner. So I got into the dinner. Well, one of those was to meet up with a guy named Will Barnard. So if you're on Bigger Pockets, he's not part of Bigger Pockets, but he's one of the main contributors at the beginning, and he's got some crazy number like 5,000 posts or something like that, maybe more. Well, I got I think I paid $1,000 for that raffle ticket item, which allowed me to go and spend a day with him. So instead of doing a Zoom, I flew down to LA in December of 2019. And within the first like 5 minutes, he's like, "You work at Amazon with all these people to make a lot of money, and you don't have a real estate meetup? You're an idiot." So, December 2019, the week after I created this group called Real Estate at Amazon. Now this number is from end of 25. There's over 3,000 people that are in this group because of that guy because I wanted to go see Bigger Pockets and have dinner with them. I bought this raffle item basically, which then took me to LA, calls me an idiot. I then set this up, and then by doing so, I've met obviously most of you or half of you are probably from that real estate at Amazon, which is also parlayed into most of my clients also come from that real estate at Amazon. My thought was is like I like real estate. I was already investing. Why don't I have Amazon pay for me to do real estate? So I switched into a real estate job December of 2020, literally the week of COVID. And then two, I created this meetup. So this is because what was happening is there wasn't a lot of ways to connect with other people that were doing the same thing. So I was trying to build a community around me that were also investors that we could learn and grow together, like what we're doing here today. Um, and then most recently, I've created this one. And Mark, this is a picture from us when we were in Hawaii last year. This W2 to Freedom. This is the new community I'm building up. It's my YouTube channel. I got Instagram. It's pretty hard to build a YouTube channel. Mark, I think, is like 1,500 people. I'm at 60 subscribers, so it's taken me a while to build it up, but I'm sure it'll surpass this. My goal is to get to 10,000 by the end of the year, so I got to get hustling or create some sort of viral video that's going to slingshot me forward. But this is probably one of the bigger wins where by meeting a lot of people, it's progressed into partnerships, clients buying and selling, and more importantly, learning from other people. By the time I left Amazon, it had gotten big enough to where we could get like big name talent. So like we had Jay Scott on there, local people. Thatch Wynn was on there, Leica was on there, Dion was on there. We had Brandon Turner, um, Pace Morby. So like all the names that are in kind of the real estate community wanted to come in. Like who didn't want to talk to a lot of rich people at Amazon, right? So once we got to over 1,000 members, that's when we really started getting more and more access to these bigger people. And also, like one other thing that came out of that is that I would connect with all the other companies. So like I went talked to the Meta, Microsoft, who else? Those are the two main ones. Well, I ended up introducing them to people who were speaking at mine. In exchange, they would introduce me to speakers I wanted. And also I would go present over there. So I presented a couple times at Meta, which then helped build up more community. Having the ideal partner. So in this scenario, so this is Cindy, she's my now fiance. We're getting married at the end of the year, 12/31/26. New Year's Eve party, and magically the last day of the year. So now we'll have tax benefits together. So she does pretty well at her job, and she pays almost 40,000 a year in taxes. So in 2026, most likely we'll get a massive refund. Most likely all that 40,000 in 20 when we file for 2026. But I put this picture on there. Went to in the Caribbean, this is like literally called hell, this location in the British Virgin Islands. So she's been to hell and back because she's seen it from 0 properties to 45 to 30. And she's told me to stop and slow down more times than I can count. But thankfully, she's been there. If it wasn't for her, I probably would have been bankrupt already. So she keeps me in check, helps me make the right decisions. Nowadays, I can't do a deal without sign off from the boss. So, which is good because it helps me get out of the deal heap. So for those that are single, if you're my ex-wife, for example, I made more money and we spent more money. It literally went like this. It didn't matter how much money I would make. I could make $1 billion. We'd spend $1 billion, literally. So thankfully, uh, moved away from that. In this scenario, Cindy's never really had a lot of money, and unfortunately, her last husband was a deadbeat. She was the breadwinner, so she's good at managing money. So, if you guys can find the right partner, one is aligned with your goals, and then two is cost conscious, meaning doesn't want to spend all the money and can defer enjoyment. This is the ideal partner for you to grow your business. Last win here. This is the right sizing. So for me, I left Amazon 2022. For me, what was easy is I was doing a ton of deals, small deals. I had a couple partnerships, and a lot of these loans were commercial. So at one time, I had in the 20s, like 20, I don't know, 25 commercial loans. So for those that don't know, commercial loans usually only have a 5-year fixed period. So I refied basically everything in 2020, which got a lot more money out to go buy more. That was good then, but then what had happened was that means in 2025 and some in 2026, those balloons were coming due. So in that scenario, that means I either had to refinance or pay it off. And so in 2024, I saw that window coming. I'm like, for like over a year, I was like, oh, the rates are going to come down. They're going to come down. They're going to come down. Wasn't happening. So I basically was like, hey, I'd rather make the decision today to right size, sell off some of these assets such that I can de-risk. So because what if I would have refied these are all at like three below four. So like 3.5 to 3.75. If I went to DSCR loans at the time, it would have been like 7+%. So imagine your mortgage payment going up by double. Most likely, every property you have is not going to cash flow if you double the mortgage payment. So I was like, I don't want to gamble on it. What I know today is they've gone up almost 100% since I bought them. If I sell today before everybody else has to sell, I can probably get the price that I want for it. So what I ended up doing is I sold off a bunch of properties in 24 and 25. All these had short-term debt on them. So this is 15 properties. So all these had some sort of short-term debt, and some of them were related to I got out of two partnerships and I closed down Michigan. So there's a lot of time investment when you're dealing with partnerships in different states. So by doing all this, that saved me today because otherwise I would have had to refi a bunch of these and they'd be, a bunch more alligators. Last one here is win and solve problems creatively. This one on the left is in Yakima, Washington. It's a sixplex, it's like a Frankenstein house, large house split into 6 units. I ended up doing a wraparound mortgage to get this one done. And then once it was done, I did a takeout loan, paid off the wraparound mortgage. This one here, they needed to sell the property. They were behind on payments. So I did a subject to mortgage on this. So I took this one over. This one's at like 375 or something like that. And the equity they had, it's at 0%. So I pay them 1750 a month, and I've been working down. It's like 100 and something thousand. So um, creative way it worked for them, worked for me. Now this isn't an alligator because I have the 1750 that is on top of the mortgage payment that I'm paying for them. Um, in a way, it's kind of like a forced savings plan, but if I was doing it today, I may not sign up for that deal because it's definitely not cash flowing. I try to figure out a way to pay their money back uh, further out. So like lower monthly payments, but then some sort of balloon when I sell or refinance this property. And then this last one, this is actually this one was Face or Zillow for rent, I think, or for sale. This one was off of Craigslist. They wanted to sell. This is actually property 19 of that they were selling. The last one ended up doing a seller financed. He was adamant about 5.75 but I was able to get this with only 3% down. So I think it was like I think I paid 400,000 for it. So under 15,000 I was able to buy this property, fix it up. Um, and then I have this one was on a 5 year, but I had the option for a 3 year extension. So I took the 3 year extension because actually 575 is good as of today. So I have another 2.5 years before I refi out of that. Let's get into things what I do differently. I only did one house hack from 2016 until 2025. Man, if I would have done one every other year, come to find out, I made a mass amount of equity on this, and then this is like my highest cash flowing. Like this property, like in the summer, nets 5,000 a month because of the parking and then the long-term rental on the top and then the medium-term rental on the bottom. If I would have had five of these properties, I mean that would be way easier to manage than 20 plus properties out of state. So if I would have done that, it would have been more wealth, more cash flow and appreciation. And if I would have bought specifically stuff like this. And then self-managing, I self-managed probably for the first 2 years on that house hack, but I didn't self-manage anything else. I went to property management day one. I I would have done more self-management at the beginning, and I just signed up for this guy's course. The ORAD people know lumberjack landlord, but if you're not familiar with him, big time investor out of the Northeast. I don't even know how many units he has. I think 150 or something like that. But he buys them, fixes them up, and then gets them into high quality status, and then he self manages all of these. So I'm taking his course and the boot camp to then I'm going to start with Washington, take everything back in house because I'm paying at least 6,000 a month in property management. So I could increase my cash, obviously more time, but I can increase my cash flow if I do this. I think somebody had asked about this about scaling earlier. So what I did is on the right. I scaled, then I stabilized. It's not a good, it's not a good way to do it. I should have stabilized, then scale. Because basically, when I did this model, I scaled problems. I created more problems faster by getting into multiple states and multiple property managers, multiple partnerships, multiple entity structures. It just, the complexity grew super fast. If I would have stabilized and then scale, I'd have way less problems today. Now, probably less properties, but that's probably a good thing. So in reality, you don't need a whole lot of properties. I was, which goes into this. Uh, Before, I always thought that more was better. It's like more of a vanity metric. I was like, how many units, how many properties, how many can I do, So like the thought was if I could make 10,000 a month, I could have 100 units at $100 a month. But I know that Dion, if you guys are familiar with Dion McNeely, effectively he's like 10 units at $1,000 a piece for 10,000, right? There's two totally different ways. I used to be in this camp. More is better. Um, counting how many properties, all about top line revenue. And it was appreciation or cash flow. So now um, better is better, meaning I want bigger properties, better locations, better tenants, newer properties that have more profitability with less. And the ability, like that one house that's the house hack. I have appreciation and cash flow both. I'd like the perfect world there. And then I did, let's see, four partnerships. And I just kind of organically grew into these. I ran out of money, and then people were like, "Hey, like, if you ever have a deal, let me know. I'd want to invest with you." I was like, "Oh, okay, cool." So then, after property number 20 was the first one that I had done with a partner, and it was somebody that I'd met and been telling him about real estate for years. Well, he was smarter than me because he basically was like, "Yeah, let's do a deal." He just brought the money. I was sourcing the deals, doing the books, managing the property, dealing with the lender. So like in hindsight, like when you're doing deals, it's about, or I should say partnerships, generally there's somebody that has money, somebody that has experience, and somebody has a time. They were only bringing the money. I was doing the experience, money, and time. So like that was not very smart of me. So I was putting too much time. My return on time was not great here. And all my partnerships were structured the same way. Um, as I shifted, I had changed it to where I would pay them back out of my earnings. Or the last one I did is I had $0 in, I was 20% owner. But if I was to do another partnership, if they're money only, then this is that people who have asked me since then, I want to be 50% owner, zero cash. If they say no, life is good. I don't need it because like I need that much in order to even think about doing a partnership if they're only bringing the money. And then I think this is the last one. So for me was enjoy the process and make memories. So like I was so focused on getting out of the corporate world that I didn't document it as much as I should have from zero to the peak. And then I didn't stop to smell the roses and then like soak it up to where I would have memories of the whole thing. I literally don't even remember buying some properties. I was just so heads down on this. If I was to do it all over again, I would enjoy like, what I do remember is doing these meetups and connecting with the people. But connecting with the properties and enjoying the process of like the learnings along the way, that would have helped with the stabilizing and scaling. But just remembering more of the process, right? So enjoying the process more than the destination. So that's the end of the my 10 years of learning. I've gone like over let me almost an hour and a half. Um, what I'd like to do, either if you have a question, and drop the question in the chat, raise your hand, or just drop speak out loud. Or if you have from your experience a win, a learning, what you do differently, I'd love to hear that as well.
I guess I would say one of the big things is it was good for me, but it causes some drag. I have a bunch of properties. I bought a whole bunch of properties quick, so now that works out well because I bought them right and everything else. But I have properties that I still have to do renovations on and stuff that are not occupied, so they have a drag on my income. Um, the occupied properties do have, I make, you know, I'm at about 750 in profit per occupied unit. So with the other ones pulling a drag, right now I'm pulling in about 10K a month in pure profit. Once the other units are finished and renovated and working like they're supposed to, I'll be at about 30K a month in pure profit. So
Man, that's awesome.
but it has to do with buying them right. And, while I wouldn't necessarily change, the only one I would change is the two properties that I bought that are an hour away from me. I probably wouldn't have bought those because I don't have time to deal with them. Once I retire, I'll take care of getting those done. But basically, but they're probably the biggest drag that of all.
Mhm.
Two mixed use buildings that I bought out in a rural area that is about an hour away. So,
And
but
you're
that,
in the East Coast. Is it like Philly or
no, I'm in Rochester, New York.
Rochester? Okay.
So, and then the two buildings I bought are in Clyde, which is a rural area east of where I live. So,
Yeah,
I have.
Rochester's been like one. I mean, if you look at the last 5 years,
Mhm.
Rochester's in the top 10, 20 markets for appreciation, right?
Yep. Well, it's been decent. Yeah, because um our housing has always stayed very low cost. So I pretty much buy, you know, um, like a duplex, for instance, would be under 50K.
Mhm.
So now it's harder to find those than when I was buying a bunch of them. So that's why, buying it right is good. But the last one I bought for 50K was in August. So not that far, not that far back. So it's, you know and that one actually stretched me out a little bit because I took all my free cash and bought that, and then it needed a bunch of work that needed to be done immediately, and so it ate up a lot of my free cash. But you know it's a property that's going to be about cost me under 50K. I'd say when I'm done, one unit is renovated now. I got to finish the other unit, but overall, I'm going to overestimate. Overall, it'll be about 40K in renovations, including doing half the roof. And then the rents, I'll be between 3,000 to 3,300 in rents for the both sides. Which actually, one thing I find interesting is I can find lower cost housing where I'm at. I can pay less, but my rents are higher than a lot of areas that are higher cost of that cost more to buy. Like you were noting your two bedroom for 875. Well, I'm like, we're at 1,200, like, and I'm still below everybody else.
Right.
You know, so it's just kind of you know, it's been a good market, and Rochester has been one of the best has been rated one of the best places to live. Pretty consistently, it's usually one or two every year. So.
Nice. So I guess that's kind of a win in the learning. The win would be basically you're burying the properties, and then the learning is not to have too many burrs at the same time. If I'm hearing you right.
Yeah, pretty much. Pretty much.
Nice. You had asked about earlier about the 6 months away from retirement. Like, what would I do differently? Like my main thing. knowing what I know now, I would tap into as much lines of credit. So, on houses, property, because like, yeah, that'd be one, and then start trying to live off of your only the income coming in from your rental. That's what Dion did as well.
Yeah.
Live off your rental income only. Or if you're thinking about doing a side hustle, start working on that side hustle at the same time. Because like for me, and then get some private money lenders and hard money lenders as well. Because like when I became unbankable, you had a W-2 job, I could get any loan pretty much. Then I could get no loans, right? Now you can do DSCRs weren't as popular back then, but you can do probably DSCR loans today without the W-2. But yeah, I would get some lines of credit set up, whether you use them or not, just so you have them if you need them. Get a couple more credit cards if you need as well. Um, yeah, those would be the main things I learned because like banking became difficult. It's just now, being what, year 4 out. Like now I'm bankable because I have 2 years of like agent income to where like if I wanted to get a regular loan, I could versus a DSCR loan. But maybe the other thing would be is if you want to continue to grow, is start getting if you're not already, learn how to do creative deal structure because from when I became unbankable, I was still acquiring properties. I just forced me to get more creative. Seller financing, subject to lease options, all that kind of stuff.
Yep.
Borrowing private money as well.
Right. Well, I'm at the stage with the units that I have and the profit that it'll make. I don't necessarily need to buy more.
Hmm.
Um, my original goal was get to 50, which should produce 30,000 a month in profit, and then decide if I want to grow from there. But now I'm at the stage of if once I finish getting everything ready, I'm going to be at 30K without 50 properties. So, I may decide not to buy more,
Hmm.
you know.
Yeah. Yeah, I mean that's less is more, like what I was talking about on a
Yep.
previous slide. Yeah.
Yeah,
Cool.
because the other thing with having more properties is we self-manage. So I had my wife leave her job a few years ago, so she does the day-to-day property management stuff, which isn't there's not a lot to do every day. So
Right.
but at least she's there, if we have to have a contractor, meeting contractors, meeting different people to get things done, meeting with tenants and doing showings and everything else. So it makes it a lot easier to have somebody that has the free time to do all of that. But it comes down to how much time do we want to spend doing stuff versus having our freedom.
Exactly. Yeah, I mean, let's just say, I mean, 30,000 net is a lot, right? So, I mean, Dion is spending 20,000. He's having a hard time spending 20,000 with him, and he still travels quite a bit. So, yeah,
Right.
if you need
Yeah.
to, you can sell it because you've got a great base foundation. So,
Right. Yeah. Well, the 30,000 is based on too big to fail. You know,
yeah,
once you have that kind of money coming in, even if you're half, 50%, it's, you're still living large. So,
nice. Is there any other um, feedback from the group or any other wins and learnings they've had that they want to share with the group?
I'll jump in. This is Uche. One of so I like I mentioned at the beginning of the call, I just got my real estate license. And going to be taking real estate more seriously moving forward. But you know, up until this point, I own three investment properties which I use for short-term rentals, Airbnbs, a couple in Phoenix, one in the Poconos Mountains. Um, in the wins category, I would say,
one thing that I did, and to Justin's point about being unbankable, is working a W-2 and being highly leveraged with all these properties. My debt to income ratio, even though I make good money, it's not like I it's not like I can't afford the loans. It's just that the lender sees that I'm highly leveraged with all these properties. And so it's really hard to get traditional financing. And so my last purchase in the Poconos Mountains in Pennsylvania, I did a DSCR, which is a debt service coverage ratio. Basically, the lender is looking at the revenue from the rental and not they're not looking at your income. They're not looking at your ability to finance they're not looking at your debt or your income. They're just looking at the property itself and how much the property can bring in, and if the property's revenues can cover the debt to some ratio. Usually, I don't know, something, I don't know, Justin, like 1.2%, 1.2 is a ratio, I think. Usually one, I think. But anyways, that was definitely a win because I was able to, buy a property, which is doing relatively well. I'll have to. It's been in operation less than a year, so I'd have to wait for a full 12-month cycle to decide if how things are going, because you want to wait for the summers and winters and the full cycle to really tell how successful. But so far, I'm cash flowing. I'm doing relatively well. Um,
That's good.
yeah, yeah, absolutely. And then on the learning side, I guess I'm not sure if it's a learning or win. I will say that I self manage. I only have three properties, and so I've always thought, hey, I can do these myself. And so I self manage from Seattle, properties in Arizona and Pennsylvania, right, with the time zone difference. And sometimes that works for me, right, because I'm not having to pay 15-20% to a property manager. I just, coordinate cleaners and maintenance. I just had a guy come out and service the hot tub in the Poconos today and paid 175, and I just coordinate that myself, give them access. I can see them on the Ring camera when they come in, and so I know what they're doing, and it's been really successful. But there's times when there's been moments where during Christmas and New Year's, I'm supposed to be celebrating with my family, and I'm gone for half the day because I'm trying to coordinate. Cleaners aren't showing up because it's snowing in the Poconos, and it's 2 feet
Right.
2 feet of snow, and a guest is coming in, and it's an hour. They're an hour away. Cleaners are not there, and I'm like, panicking and calling Airbnb and saying, "Hey, I'm sorry, I can't host them," and yet that is, it's definitely stressful.
Yeah.
But I guess you win some, you lose some, right? But yeah, that's kind of my journey so far. But it's been a rewarding experience. I like Justin. I like real estate, and I just like the um, the excitement that comes with owning and managing and seeing people enjoy um, real estate. And so, yeah, hopefully this will be a successful path.
Nice. Yeah, for a lot of people on here are tech employees, so a lot of people have been doing these short-term rentals for the short-term rental loophole, which allows you to bonus depreciate your property as long as you meet certain requirements. If you guys are on here, high income, and are not a real estate professional, that's really your only way to use depreciation in your favor. Short-term rental loophole, follow the requirements. Typically you're able to bonus depreciate, ballpark, I think it's around 25-ish% of the house value, which means take the land value out and whatever is left. You'd probably get 25% of that as year one tax write-off. So could be a huge benefit for you guys. Let's see. In terms of like just feedback for me, I'm always looking at the next meetup. The next meetup, I'm going to be talking about out of state real estate investing. But for I'm open to what would you guys like to see for future topics? Um, you can just shout them out or drop them in the chat there.
Out of state works perfect for me. Looking forward to that one.
All right, yeah, the out of state one's going to be in April. Now that one, if they have, because we're planning on doing it at Total Wine. It's a free setup. If they have like Wi-Fi and all that set up, I can live stream it. But if they don't, I wouldn't be able to. I might be able to record it and then post it on the YouTube channel though. All right. Any other feedback in terms of like future topics that you want to see?
Where are you holding the in-person ones?
They're in Seattle.
Okay. I'm hoping to make a trip up your way in middle of summer.
Yeah, second Monday of the month, every
Gotcha.
for the balance of the year.
Yeah, Curtis, I guess Curtis has a big handle on all the events going on out that way.
Yeah,
So
cool.
I gotta bring him a big bird too.
Nice. I saw Morgan, you dropped in here. You found a deal, and now what?
Yep. Justin,
Sometimes
are you
that's the
going?
hardest one. Good.
Yeah. Are you going on Dion's cruise?
And I'm actually doing another cruise same time with my family that was already planned. It's because it's in like second or third week of June, I think, right?
It's the 21st through the 28th. So
Yeah, I'm on the 20th to 26th. I'm in Florida,
uh,
going out of Cape Canaveral, I think is the port city. So
mm,
yeah, I'm literally the farthest away possible for his cruise. But I'm doing the Alaska cruise in July though. So you guys will have fun. As long as you get good weather and go through the inside passage, that's probably the best part.
yeah, I actually went on Alaskan cruise this last summer, and then when Dion planned his, I'm like, because we were potentially going to go to Greenland, and then we went to Alaska instead, and then Dion planned his thing, and it's like we should have went the other way around. So I'll be going to Alaska twice. So,
Nice. Yeah.
but
I just saw here a couple more. If you can talk about ADUs in the future. We did one of those in December. Ashish is on here and we did reviewed his project. We didn't record that one, but that one's a very hot topic, meaning a lot of people want to learn about it. So we're the guy that built my Dadu. We might have him either do it in on-site walkthrough of a Dadu, or we could do one where we bring them in and we do like A to Z feasibility, build costs, something to that is what we're looking at. Scheduling something a little bit later in the year with him. And then Jason, you had stabilizing after buying the property. That's a great topic. It's actually one that I'm still learning myself because so I was reviewing my 2025 for some my property managers, and the expense ratios have just crept way up. So I'm like, I mean, geez, I can pay myself to increase the cost, right? So I'm like, I got to figure out how to turn this around. So I've switched now to where because I used to have like $500 was the threshold. I switched everything to $0. So like anytime you're going to spend money, you need to reach out to me. So ironically, I had a month where I didn't have any issues on a 16 unit build, the two in Iowa, the two aplexes. So what ended up happening is they got more diligent at billing back. So it was like clogged toilets and stuff like that. And so just to make like me managing the manager is I'm starting to see some improvements there. But definitely I'm still learning that. Property management, there's a lot of new AI tech there. Yeah, so the property management is there's a lot of software. I think Hemlane is definitely one that the ORAT community is familiar with. But I'm sure there's a couple other ones that are out there that people use. I've heard of Turbo Tenant. I know that the people that do the rent by the room, they like the Turbo Tenant. But I'm sure there's more than that out there as well. All right. I think that's the last slide. If you guys don't already have my info, this is my cell, my Instagram, YouTube, um, my website there. If you go to it, it's a work in progress. It's not finished, but and then if you are local and looking to buy or sell, this is the me as a real estate agent can help you on that stuff. Um, with that, I'll open it up to the floor. either if you have questions, I'll answer them. Otherwise, it was good seeing you guys. I'm glad a big chunk of the ORAT community was here. Glad you guys all hopped on.
Thanks for doing this, Justin, and taking your time to educate us and impart your wisdom. Super
No
cool.
worries. I appreciate it. Thanks for showing up and being active
Yeah,
and learning.
of course.
All right. If
Thanks
there's
for
not any
having us.
questions, I'll close it up. Or did somebody have a question?
Oh, I said thanks for having us.
Oh, yeah, no problem. Thanks, Jay, for logging in.
Yep.
All right. See you guys.
Right.
Appreciate
Yep.
it.
Bye.
Well,
Jim, did you have something? Oh, no. Giving stuff away? Did I say that?
I was here for the free prizes, man.
Oh,
No,
no.
no, no, I'm just playing.
Oh, I love your only cash flow. Is that trademarked?
I don't know. I just been playing around with it.
Oh, you and your AI.
Yeah,
What's the one right behind you? Oh, the financial firefighter. I see it.
yeah. I just been playing around with that logo.
Yeah, I like that logo. You might have to tone it up a little bit. Give yourself a tan there.
Yeah, you gotta go see the AI on the video Millennial Mike and I did, and then the thumbnail he made. I don't know what
Oh,
happened on his AI.
I did one on Wednesdays after the Cody. I do a separate call with a guy that has his own school community, and
Oh,
he did a thumbnail, and they must have took my picture and enlarged it. My face is like ginormous in there. And I'm like, hey, I think if you need a picture, I can send you a
oh,
picture.
I think I may have saw that one. Yeah, I think I was gonna make a joke or something. I think I saw that what you're talking about. What's his
Yeah,
name or who's the guy?
Brennan Wiersma, and gosh, what's his? I'll log into school and then you can see it.
Yeah, I think I remember seeing that. I was like, whoa, what happened to
Yeah,
Justin?
he has. Let's see, Get Wealth Community is his. So we do every Wednesday. We do live stream through here, and then he drops the video to me. So I just need to post those videos into mine YouTube account.
Where's he at?
He's a pilot out of Dallas, I believe, but he's from here. So his dad lives like 20 minutes from me.
Oh, I met she was on I was on with Gus yesterday. Sabrina Maples.
Yeah, out of Phoenix.
Yeah. She's
Uh-huh.
in a Thatcher's program, right? Or
Yeah.
but she went to Washington too for a little while, right? She went up there because everyone
Mhm.
was up there, she said.
Yeah. Gus, which I'm trying to blank on Gus. Which
Uh he's in like Bangor or Bangor, Maine. He's in school. He's
hmm,
nice. I don't know how to explain. He's a hustler. I mean, he's a nice guy.
I'll have to look him up. I see
Yeah, he's a
Mason on here. Mason Mattioni, are you still on? I'm assuming you're from ORAT.
Yeah, I'm here. Can you hear me?
Yeah, thanks for dialing in.
Yeah, for sure. Yeah, I've been doing some work on the side, so I've sort of been in and out. Apologies for the not been in the loop the full 2 hours, but definitely wanted to get on here. No, I actually Justin reached out to you sometime. Geez, it may have been like a couple years ago now. I'm in the Seattle area. I live in Sumner and do mainly wholesaling deals. Got a flip going in Bonnie Lake now. So I got reference to you. I honestly forgot by who. It may have been Mike DeHaan, if you know who that is out of Spokane.
Mike Tahan, I think so, yeah. I think he's in Go Abundance with me. I think is how I know him.
Yeah, yeah. But either way, yeah, no, been following you for a little bit, but yeah, just I've appreciated some of the questions in here, especially revolve. Oh, I'll turn my camera on here.
Yeah, I have
Around risk tolerance because I got I got a family as well, 2 kids, and it's interesting like seeing everybody make decisions based off of how much the risk they're willing to take on, and you can't relate to like everybody the same way, because the
Hmm.
way I'm looking at investments is different than the guy next door. And yeah, so now I'm just hustling with my wholesaling business essentially. So I was curious to see how you generate your leads and how you're getting most of your deals because I'm like in that space full-time lead gen marketing,
Hmm.
um, trying to build a business. So
So right now, I'm in the process. I switched from KW to EXP. One of the reasons I switched is they have this thing called Funnel Pilot. So they set up all my ads for me on Facebook. I'm starting with $500 a month just to see what it does. But if we can get it, basically gets a lead, drives it to your website. The website drives it into the CRM, and then we reach back out to them. But I'm like, if for $500 I can get a couple of leads per month, that could be huge. So
what are
doing
those
that,
leads? What are those leads for? Like what kind of
those are
properties?
more agent. Those are either they want to sell their house or they want to buy something. The Facebook leads.
Okay.
Um,
Okay.
Separately, I have a cold caller in the Philippines. And so she's calling expireds, for rent by owners, and then we do certain targeted lists around the area. She's generating about one lead a day, I'd say on average. And then we're following up on those. So, but our conversion hasn't been great on them. So I would say in the last, 3 months, we closed two deals that were from her. We got one that's closing in 30 days that came from her. But when we're meeting with people, we pitch them on cash, list, or creative, kind of a three-tiered approach, depending on what they're trying to do. So if they want cash or they're distressed and just need the money fast, we'll wholesale it, or myself or somebody on my team may buy it. And then, but lately we've been kind of guiding people because they tend to want retail price, so then we guide them into the listing side of our business versus the wholesaling side of the
Yeah.
business.
Yeah, it's tough. Like being mainly wholesaling, a lot of the leads that come in are closer to retail. Like actually most of the leads are coming in are not like the classic distressed property. And so it's like my job is to give them the option to sell off market and why that might be better for them. And
Hmm.
sometimes the listing does make more sense. Like super nice properties out in Gig Harbor, like yeah, I'll refer you to a realtor. I'm not licensed, so I can't take on listings. At
Uh,
least I can refer them to an agent that I trust.
yeah,
Um, but yeah, no, that's interesting. I've got 3 full-time callers in Egypt now, and then VA in the Philippines. So I got a little team working for me, which is nice. But I'm trying to scale and yeah, targeting 10 leads a day is what my goal is to
yeah.
get to where I
So you're
want to go.
getting 3 to 4 leads per person per day because you have three callers.
No, that ten per day is where I want to be, and I'll have to hire more people. But now
Yeah.
I'm getting 3 to 5 leads a day.
Mm.
Um, like today actually it was only 2. Um, but some days they're all bringing anywhere between one to occasionally they come in with 3 leads a day. But yeah, they're all doing one or 2 leads a day, and that's generally the a good benchmark I think for callers.
Yeah,
Um, but yeah, no,
that's what I've seen.
it's yeah, it's nice. I like having an internal team that I can like call up and ask them about a certain lead versus hiring it out because I've hired out to 2 or 3 different lead gen companies and haven't been too happy with them
Who
for a
was it?
couple.
Easy button?
Um, Easy Button's one, and Resimply. I don't even know if they're still a business anymore. No, not Simply. Simply Leads, not Resimply. That's the CRM. Simply Leads. I did them first, and then Easy Button. I actually just paused them, but I'm working with Cole, who you probably know from Easy Button, and doing some coaching stuff with them still. But I'm not getting leads from them. It's just
Are you coaching
yeah,
for him or he's coaching you?
he's coaching me.
Yeah.
Somebody for Tyler on his team is coaching me.
Yeah. I mean,
Yeah.
I'm sure he's done a ton, right? He's probably Daynard's number one lead source, I'd imagine.
Yeah, he's I don't really know. Like I think his company is still going, but I really don't know much about his company. But he's knowledgeable and he's hired a pretty good team. So do you know Tyler, the who works for him? Tyler Eaton?
Was that is I met him when they were just starting wholesaling, gosh, probably 7, 8 years ago. If it was he had another young guy with him, that might have been him. But
Yeah.
that name Eaton sounds familiar in terms of last name.
Yeah. So it's nice to have somebody who's grown a business out of it, help me out with whatever questions I have and coach me along. So
How many deals are you doing a month?
averaging one last year at least.
That's good.
Yeah.
I mean, because effectively you're like a solo, but with the admin support and the caller. So, I mean, there's
Yeah.
a
And
ton
it's
of
part-time.
people.
Like I still have my W-2. I still work for Boeing.
Uh,
Um, I'd like to quit. I'd like to quit. Uh, but so yeah, it's just a side hustle now. I'd like to buy property though. So it's tough like just being in the grind for so long with wholesaling and chasing that next deal, but also wanting to buy property and knowing like how to navigate that, like what the best next move really is.
right.
Because I want to be all in with the business and grow the business, but also I'm interested in buying properties like everything you've talked about.
Yeah. I mean, with four VAs, you're probably what, 6,000 a month just for that. So you kind of got one deal, you probably what, 15, 20,000. What's your average?
Yeah, yeah,
Yeah,
15, 20.
so then you're getting probably 50 to 75%. I mean, but you're still got to be getting close to what, even if it's netting 10,000 a month, from what I understand about Boeing, you're probably similar to that.
Yeah, yeah, it's tough because I would like to build up enough capital to have enough reserves for the business and my family. If everything fails, I need to have some sort of safety net.
Hmm.
So it's just you know, keeping that in mind before I make the jump.
Yeah. I mean, I mean, most wholesalers don't even do, five in their entire life, right? Most do zero or one, right? So, I mean, for me, I've technically only done one wholesale. Either I joint venture and flip it, I buy it, or I list it. So, rarely do I get a wholesale.
Yeah. Yeah, it's a good vehicle to learn a lot of things. I don't know if it's the end game for me though.
Hmm.
But yeah, I'm using it to escape the W-2, at least for now.
Yeah. Well, yeah. If you got, because I do basically 1 hour Seattle. So if there's a retail lead that you can't do, I'd be interested in that. Could figure out an arrangement. I'm not sure what you got set up with the other people, like the Gig Harbor one you were talking about, but
Yeah, no, I'm sending stuff to a couple different realtors or agents in the area. I don't think a lot of it's in Pierce County, but yeah, within an hour. I mean, happy to keep you in mind to pass on to your team.
yeah, because we just sold one in Tumwater. We've done two deals in Gig Harbor, um, and then we did Marysville. And then pretty much everything else is like either Tacoma proper or Seattle. It's probably the rest of what we do.
Okay, cool. Yeah, always opportunity
Thanks for hopping on and
for sure.
turning the camera on. So now I can put a face with a name. Although
Absolutely.
we might have met, do you this may be totally unrelated, but I was thinking when you said your name, then I was like, there was a person that do you have a Instagram picture where you're standing next to like a white car or something like that?
I don't think so.
Oh,
You said what? You said a
oh,
white car?
a white car standing in front of a white car, like a sports car. It could be totally unrelated, but for some reason,
Probably not me because I'm not a car guy.
oh, okay. So cool. Well, thanks for hopping on.
For sure. Yeah, thanks, Justin. Yeah, I appreciate it. You said you have some in-person meetups every month or quarter?
Yeah, the next one is it's always second Monday. So this next one's April 13th. I'm going to check out we have it reserved already. The Total Wine and More West Seattle. Supposedly they have a 30 person, behind the showroom area. They have a classroom setting. So it's free for us to rent. So I rented it out and then just gonna double check that it's got like AV and stuff like that. And then I'll post that meetup. But yeah, that's second Monday. Come to as many as you want to.
Cool. Yeah, man. Yeah, thanks for putting the meeting together.
Cool. I mean, since you're a wholesaler, I mean that'd be kind of cool to have you present on wholesaling if you're open to it.
Yeah, what do the events usually look like? Are just kind of casual meetup for any sort of any investors?
Yeah. So the meetup one is to build the community, but two is like um, it brings people together to either if you want to buy together, sell together, private money lend, or if you need agents. Obviously, I'm there. People from my team are there. So similar to the other meetups, there's really not that many meetups anymore. I mean, there's the Wallry one, but now you got to pay for it.
Yeah.
But typically the meetups are so people can interact and learn from each other, but then also transact together.
Nice. I'll have to come check one out. You said they're Mondays. I have a weird work schedule that always changes. Now I'm Sunday through Tuesday, second shift at night. I work 11 to 11. So that's actually where I'm at now.
Oh, geez. So you're okay. So you must be ops support or something.
I'm an engineer, so I'm a liaison engineer. That's what they call me. But I'm in Auburn at the fabrication shop where we make the little individual parts or assemblies that go on the planes. So I'm not on the assembly line.
Nice.
Yeah, yeah, it's cool. Um, been decent to me, but not really where my heart's at.
Yeah. There's one of my clients, he's in Springboard and he's at Boeing right now. He posts a lot of stuff about Boeing. I'm sure if Boeing ever saw what he posts, if you look up Mark Brookman, he's a Boeing guy. Oh man, he has one of his videos went viral, but he basically talks about management being stupid there or something like that.
That's hilarious.
Yeah,
Um,
he has Mark Brookman and then he has a because he's a military guy. He has a I'm drawing a blank on the name, but it's basically a real estate investor group for military professionals.
oh, that's cool. Nice.
But yeah, that's where he posts a lot of his, for lack of a better term, Boeing bashing videos. It's pretty funny.
That's funny. I'm sure I'd get along with them well.
Yeah,
Nice. Cool, Justin. Well, yeah, I follow you on the socials, so I'll see your meetups.
sounds good, man. Thanks for
All
hopping
right.
in.
Yeah, thanks a lot.
Yeah.
See ya.
Mark, what's your story? Did you do the medical retirement?
Not yet. I'm still on workers' comp.